We already talked about the Bundesbank's warning of a recession. Now Germany's finance minister is suggesting the government could do something it's resisted for decades, spend tens of billions of dollars in stimulus. Christian Schulz is the chief German economist for Citi. He joins me now from Frankfurt. Good to have you, as always. The decision by the finance minister to basically tell everybody to get ready for stimulus, that's new. That's a different way of looking at things for Germany.
Yes, in the speech itself, he probably didn't really say very much. He just said that 10 years ago, during the financial crisis, Germany did about 50 billion worth of stimulus, and it could do the same again if things get really bad. So he hasn't actually promised anything, but I'm sure he was aware of how these words in the current context would be perceived in the markets. So it is a shift in Berlin, which is gradually emerging. Where there is smoke, there must be a fire somewhere.
Right, but if there's a smoke, if there's smoke and there's a fire, then the Bundesbank appears to be the one that's called the fire brigade.
Indeed, the numbers in Germany don't look great. We've had negative growth in the second quarter of this year. All the leading indicators point to further weakness ahead, in particular, of course, in the manufacturing sector, which is exposed to what I call the unholy trinity of China's rebalancing, US trade wars, and Brexit. There are also some structural problems. The domestic economy is holding up well so far. Private consumption is still strong, but it probably won't last if the manufacturing crisis doesn't end.
The one thing, of course, that Germany, the government doesn't have is the ability to influence interest rates in a direct way. But one assumes, as Germany is the largest economy in Europe, the ECB will be taking great note.
Well, the ECB is at its lower bound. It really can't do very much anymore. It will try probably in September, but can't do much anymore. And it has been saying for months, for years indeed, that it's time for the fiscal side, for tax cuts and for spending increases to share the burden of stabilizing the economy. So they'll be quite happy if Germany moves. Germany itself is probably actually too small to get the whole Eurozone going. But if Germany moves, the idea is that perhaps the rest of Europe will do its share as well.
We're talking a lot on this programme tonight about recession. I mean, first of all, is there an almost certainty that Germany will go into recession, in your view? And secondly, related to that, if it does, well, Europe is woefully unprepared with Italian banks, Spanish deficits and governmental problems, French unrest, to deal with the recession.
Well, I think Europe is in a much better position now through Mario Draghi at the ECB's policies than it was at the end of the Euro crisis. We've had a long period of growth. Unemployment is much lower. There are some stabilization in the banking system. Government debt isn't quite as high anymore as it was. So there have been some improvement. But now the strength, the locomotive of the Eurozone, Germany, is nearing recession. And it really is a question of definition what a recession is. Germany may not have two consecutive quarters of negative growth, but it is close to recession already anyway. So it is time to do something, and the longer you leave it, the more expensive it gets. So the idea is that if you move early, if you move big, you surprise perhaps markets, you generate some confidence in the economy. In the end, it comes cheaper.
Briefly, does Germany have the mindset to do it? If I think back to Schulz and all the other, time after time after time, he would bang the table and say, we're doing enough. Has that mindset changed?
Well, Germany has built a lot of credibility over the years by bringing down the debt, and now is the time to use that credibility.
Good to see you, sir. As always, thank you.